Let's check the news.
Let's talk about the speed with which we are watching this market deteriorate.
1.7%.
We're down by between 3 and 4.5%.
We're down over 16%.
Down 21%. What in the world is happening?
Because we're now down 43%.
12,000!
It's now down to 5,000.
But what if it's not a dip?
Wow, buy low, sell high. That's every investor's goal. However, it is easier said than done. When the market goes wide and volatility reaches its max and people start going crazy, others start talking about timing the market. The reality is timing the market is so difficult, and us as retail investors, we don't have an edge against high-frequency traders. With the current market volatility and Bitcoin price dropping nearly 50% since April and Ethereum dropping around 35% since May, people are wondering if it's time to buy high and sell low. Joking. People are wondering if they should go all in and buy what is so-called dip. Let me roll in the new intro for a sec. Okay, I hope it was good this time. Hey and welcome back to my channel. My name is Sham, and in this video, I'll be sharing my favorite crypto buying methodology, which is dollar cost averaging. I'll try to explain it in different market conditions and debate if it actually works, and the benefits of dollar cost averaging. So smash the like button for the love of peanut, and let's get to the milk this time. So what is dollar cost averaging? Dollar cost averaging is an investment strategy in which you build positions by investing equal sums of money at regular intervals, regardless of the asset's price or what is going in the financial market. Instead of purchasing investments at a single price point with dollar cost averaging, you buy in smaller amounts at regular intervals. Over the long term, dollar cost averaging can help you lower your investment costs and boost your return. This is a lot better than investing a lump sum at peak price. Also, dollar cost averaging is ideal for long-term investors since there is no room for doubt, greed, or fear associated with short-term investment strategy. And it is more effective in a bear market, while most investors are too afraid to buy or always wondering if they are too late or too early to the game. By adopting dollar cost averaging strategy, you would actually attempt to buy the dip. So how does it work? Let's start with the assumption that you don't like the idea of dollar cost averaging and you want to invest all at once. Given that you want to invest $1,000 into a $50 crypto, as such you can purchase 20 tokens or coins in a single purchase. So what happens if you try to sell when the price is at 40, 60 or 80? So if you try to sell when the price is at 40 and you bought at 50, your profit will be negative 200. But if you attempt to sell when the price is at 60, your net profit will be 200, and so on. It is clear that the all-at-once strategy works best when the investor has identified the best time to enter the market. But as I mentioned before, we can't really predict or time the market. Now let me demonstrate how dollar cost average can help smooth your average cost in a bear market. Since you are dollar cost averaging, that means that you will be splitting that $1,000 over multiple purchases, let's say $250 over the course of 4 months, and you were able to buy the asset at $50, $35, $30 and $25. That means that you bought in total 30.4 assets, which is 10.4 more than what you would have bought if you bought all at once. So if you tried selling at $40, that will the profit will be 216, and if you try selling at 60, your net profit will be 824. And if you tried selling at 80, your net profit will be 1,432. And because you managed to purchase more shares over time, your investment grows faster. However, it is important to note that dollar cost averaging is not that effective in a bull market. As prices are rapidly increasing, your average cost might be higher, assuming you bought at 50, 65, 70, and 80. You will end up with 15.5 shares, and this will impact your profit as follows. So, if you try selling at $40, your net profit will be negative 380. And if you tried selling at $60, your net profit will be negative 70. And if you tried selling at $80, your net profit will be 240. So, is dollar cost average suitable for crypto market? I believe that dollar cost averaging is suitable for any asset class, and especially when it's a volatile asset. And since no one can actually predict the market, this is why you might need to adopt dollar cost averaging strategy to even out your purchase prices and take advantage of the market dips. Assets don't always go to the moon. That's why by dividing your purchase and making multiple buys, you maximize your chance of buying at lower prices over time. In addition, you don't have to wait until you have saved X amount of money to invest. Dollar cost averaging helps you get your money to work on a consistent basis, and it keeps you engaged with the market. Also, as humans, emotions control our decisions all the time.
Yes,
Bogdanov, he did it.
he bought,
He went all in.
dump it.
Dollar cost averaging eliminates emotions from the equation. However, there are some drawbacks like everything in life. One of the obvious drawbacks is that you will have to pay a transaction fee for each purchase. Even if your brokerage is being advertised as their commission brokerage, there is always the spread difference that you are paying, which is the difference between the buy and sell prices. And the other drawback is that your average purchase cost might increase in a bull market. Cryptocurrencies have always been a volatile investment, and timing the market is incredibly hard. There are full-time professionals with billions of capital and they have access to the best technologies out there, and they have endless resources, and they still cannot time the market accurately. On the other hand, dollar cost average may seem like a boring strategy. Take it from one of the best money managers to have ever lived, George Soros, who said, "Good investment is boring." So don't forget to dollar cost average into the like button and subscribe for more content. See you next time.